Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 18th of December, 2019. First and foremost, I have to make sure that sound is coming through, unlike yesterday, where I was basically talking to myself for 15 minutes. So if you can give me a sound check, I'd appreciate it. I want to remind everyone that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1660 as we head into the holidays here this morning. So overall, the like yesterday, the sound, the market is has got a mixed stance. We do have the Russell uh, pushing higher from settlement yesterday, the Nasdaq also, but only slightly. I would say overall just a mixed market, just like yesterday. Mixed market stance, mixed sentiment. Treasuries, the bonds are up a tick. And the dollar's up 21 and a half cents. The laggard today is crude oil. Remember, crude, we're trading February 2020, the G0 or G20 contract trading. Current price is $60.57, down 30 cents or 0.5%. The DAX is off 48 points or 0.36%, and the pound is trading hovering around 131 as it was yesterday. So apologies about the technical issues. Monday I wasn't here because my daughter was sick and I just couldn't actually do my homework before the market was open. So there's no sense in doing a trader bite. You don't want to have me come on and just ramble. Yesterday was just chock full of tech issues from my end, also from YouTube's end, and here we are today. The overall market theme for today, there really, there's really not much that has changed over the last day or two. The trade deal is supposed to come into play, is supposed to be signed, and is supposed to be in the bag. However, as more and more folks get information about what that trade deal is, the overall sentiment on the deal is that they've just been posturing for over a year, only to bring things back to where they were when we first started, really. So it's interesting because that's just a risk that's out of the way. You know, the tariffs are likely to be pulled back and so on. So the market has popped higher. We still have a gap below in the S&P 500, and that's where we stand. Overnight, we got a bunch of numbers. The IFO business climate out of Germany came in strong at 96.3 versus a forecast or consensus of 95.5. The inflation rate in Great Britain year on year came in at 1.5, expected at 1.4. Inflation rate in Canada came in at 2.2 in line. And in the US, we don't have anything that is of significance this morning, except for energy traders are getting the crude oil stock change and gasoline stocks. The expectation for crude is a draw of 1.288 million, and for gasoline, a surplus of 2.178 million barrels. Fed's Evans at 12:40 p.m. I expect and suspect that this is likely to be a fairly quiet session. Again, it seems like the holiday schedule this year is quite is the placement of it is quite interesting because it falls, Christmas falls on a Wednesday. Then we have 2 days next week, Thursday, Friday, and then New Year's falls on a Wednesday as well. And then we have 2 days, Thursday and Friday. So it's almost like the week is being chopped in half, and there's a lot of incentive for folks to just be gone be gone for the holidays, these entire 2 weeks at the cost of, I think, a total of maybe 8 days, getting 16 days off. So that's where we stand. I want to show you this chart real quick. This is the CME analyzer. Um, Role analyzer. Very important tool since we are in expiration week. Friday is quad witching day. I want to also take the opportunity to remind you that I'm not here on Friday. I will be traveling. I will be gone through Christmas. I'll be back the 26th and 27th. Tomorrow will be the last Trader Bite for the week. And for Convergent members, as I mentioned in our weekly trade talk yesterday was the last trade talk of the year. And tomorrow is our last study hall of the year. Look at the pace of the roll on this chart. And what the orange line, let me change the color of my thing here. The orange line represents where the roll is, how the open interest is moving from one contract to the next. The dotted line, the dashed line, is the average that the roll would, how much the average pace of the roll, and then the band, the bluish band is the range, and then the light blue is the max min. And we could see that through this area here, the actual roll is faster than it would normally be. And you notice that the CME is providing here that around a little under 80% of the open interest rolls, which means that about 20% or so of the contracts in the minis expire and are delivered in, are settled financially. There's no delivery, are settled financially. And so here we are right on top of that 80%-ish area, call it 79% or something smaller, maybe 78%. We are right on top of the average line, the dashed line, which essentially means that the roll is done. The effect of the roll is pretty much done. We still have Friday where we would get delta hedging and positioning into the expiration, and tomorrow. But in terms of volume, we can go back to using the volume delta as per normal, and the volume is expected to revert back to something that is normal in terms of spreads being complete at this point. Very important chart to have. Again, you can find this. You can find this on the CME website. It's available to the public. Very useful tool during rollover. Let's take a look at what was expected in our review segment. Yesterday's primary expectation, which you didn't hear, you just saw if you watched that video. Yesterday's primary expectation was that we're likely to pull back into this 31.98 area, get a bounce, and push through what I outlined in that video as the week high, the double TPO high left behind from the prior session. So if we look at this, we can see that right here at the top of Monday's session, we left a 2 TPO high, essentially technically a weak high or a high that is vulnerable because the market has gone back to it. And so I expected that high to be taken out right in here at the 3203, 3202 half area. So I expected it to pop up and fall back in. What actually happened is more like scenario 2, except it could not get as high as 3207. It barely poked through the prior day's high, and then it ended up falling through as expected. So here's what actually happened yesterday. Completely balanced profile. Look at that. It's just kind of messy. So we end up with somewhat of an open auction. We do push up just like we expected in scenario 2. In that I was looking for it to get to 7 and then fall through and then hold steady into the close. That was scenario 2 as shown. It did push through. It took out the 3202.50, 4 ticks, and then rolled right back over it through the mid and went completely sideways. Look at this profile. Nice taper at the top, and then we end up with what looks like a weakish high. The profile could have used a little bit of an extension out in order to balance things out, but it didn't. The point of control yesterday is right on top of the prior day's point of control. The value area is inside of the prior value area. The market is coiled. The market is holding sideways, and so we need to pay attention to that. Again, not expecting too much today, but this is the bigger picture here. The 2-day point of control. If I when I put a profile on this, build a composite out of this, you can see that the 2-day point of control is 31.99 and a quarter. We're currently trading at 97.50 with the overnight high being 31.99 even. Remember, 99 and a quarter is the point of control. And so if we start to turn up on the open, the 3200 is likely to be a magnet in an area that holds steady. Let me show you the 24-hour chart. Actually, what I could do is switch to the overnight, but let's look at it here. It's just recomputing now. What I want to show is how it pushed from Sunday's trading, how it pushed higher. So here's what we've got on a 24-hour basis, on an extended trading basis. What we did is we pushed higher on Monday. We held right here at the 3200 in terms of value, right? Point of control there. Then the following day, the following sessions, overnight session and day session, built a point of control on top of that. The current overnight session has a pretty blunt high right at the MC point of control, and it's a very, very boxy profile. There's just no balance whatsoever. I'm not sure why this is not painting 3 profiles like that. There we go. So this is splitting the action into 3 profiles, or actually into the overnight and the day session. This is the day session. This is the overnight session, day session, and overnight session, right? So this is Sunday night, Monday, and then Tuesday night, Tuesday, and then Wednesday night right here. And what we see here is we pushed up, we ended up with a lot of volume on the overnight session right at the high. We catapulted from there Monday, and then we came back to that high volume node right here. There's a stock zone right here. See that gray line? Because of it, because of the volume that's there. Pulled back to that high volume area, pushed back up overnight, came back to the high volume area, pushed back up. Yesterday, we ended up rotating down. The overnight session last night pushed right back to this high volume area. And point of controls right here on Monday for the day session. Overnight, it's right at the same price. Monday and Tuesdays, the overnight's point of control is the same. Yesterday, Wednesday, the point of control is the same. And then tonight's overnight session, the point of control is lower. And what this looks like to me is multiple taps at this low with a weak low. It looks to me like it might test higher, and then another run at this low is likely to push us back towards 3107. And this cluster from Sunday night's overnight session, we start to work through the gap zone, and the gap zone mid is right there at 3189 and a quarter, with 3187 being the next most likely test area, just looking at the 24-hour. This is just looking at the narrative as it's happening, including the overnight session, as many moves are occurring overnight. So that's I felt that that was interesting to share and to give you the context of where we are. Let's take a moment now and look at the order flow real quick. This is, again, this is CT Bookmap. You can get it at ctbookmap.pro. This just plots a heat map of all the orders in the book with full depth, so it goes out as far as the eye can see. And looking at yesterday, a very, very clustered. You could see how it's all orange and red. Uh, there was no volatility, so a lot of stacking in the book and so on. But looking at the overnight session, we see that it's really traded mostly in a void. There's not much there. We do have some liquidity at 31.90 that's kind of flashed in and out, but it's been there the entire session. Next area down, we have some liquidity at 31.85. No surprise there. Option strikes at at 5-point intervals. There's some light liquidity sitting at 31.83 and then 31.80 below that. Above, the key liquidity zone is 3203. 3203. That was the high of Monday's session, 3202 half, and then the high of Tuesday's session, 3203. 3202 half Monday, 3203 half Tuesday, and then so their orders stacked up here, and then I was looking for the 7 to be tested, but it has no liquidity there. It's a measured move target. The liquidity instead is at the strike price of 32.10. So overall, we see that the market is stacked a lot more to the upside than the downside, which makes a lot of sense because we're in an up moving market. Remember, you know, the market moves to liquidity. This is an old adage in trading. The market moves to liquidity, and the reason could be in that the market moves to liquidity not because the market's attracted by liquidity, but because people enter with market orders or limit orders to fill, and then they put out their targets, whereas their stops are market stops. They don't show up until they're triggered, right? So think about it. If I were long from say 3180 and I'm working to get queued on my targets, I would have my targets, my OCO targets showing in the markets, but my stops will not show until we get to that price. So as we trend up, what we'll see, which is exactly what we're seeing here, we'll see that it's almost always much, much lighter below in terms of the liquidity available versus above, because that's where the participants here who are trading momentum or trading with the trend are expecting to get out, and so their orders are stacked up there. What does that mean for us? It's important to know, and I like to see when it coincides with a stock zone area, and if that stock zone area supports the context supports a short, I like to see liquidity there to support my my trade, at least to give me enough support to get my risk off, and then if it turns, right? So very valuable information, I believe. So let's switch gears now and take a look at what's expected for today. So for today, we are pushing the high. Remember, the high overnight was 31.99, and now it's 31.99 and a quarter. We're opening right on top of balance, right on top of balance. So expecting a noisy open, a choppy open. I'm looking for the market to, it's made a run to the low. We have our overnight point of control below us. I expect it to chop around, make an attempt, and I'm looking for it to punch through, consolidate, and hold above 3,200 and start to squeeze towards that 3,207 area. So I'm looking for a push into that again, same as yesterday. And that'll give us somewhere around 11 or 12 points of range, which is about all we can expect in this current environment. That's the primary scenario. The secondary is an open auction that tests higher, consolidates at the 3202 area, rolls over, comes back to 3200, and then gets stuck at 3200 for a while before it starts to give up and move slower. What we've noticed is participation on the buy side as we push into that 3203 half area really falls off from the buyers. We see more participation on the sell side once that happens, and that's why I show turbulence in this area on both sides. If it breaks through, then I'm looking for 3207. If it falls off again, then I'm looking for this to squeeze into 3189, at least the gap mid before the bounce. That's scenario two. It's a selling scenario. So those are the two key plays. The question is today, once it is done kind of coiling at the open, is it going to go for that high and push through, or do we fall off and start working towards 3189 quarter and 3186.75 to close the gap? And then below 3186.75, unfortunately I talked about this at length yesterday and it was all lost. Once we get below 3186, there's a good chance for a quick run to 3175, okay? Good luck. I'll catch you tomorrow and just trade with risk in mind. Good luck. Cheers.